Good evening and welcome to Options Center. I want to do a quick video here. I wanted to give you a perspective. Nothing has really happened. I know that the market jumped up 1% or so after FOMC, but I don't think that, especially one person that commented, I don't think that you really get the gist of what happens with catalysts. They get you all in one direction and then they turn things on you. But we'll have to learn that ourselves, okay? So I've been through lots and lots of these, and that's why I hedge. I point out to you guys where I think the market may be going. I give you a couple scenarios. I always let you know that I hedge. I am swinging to the downside, but I hedge in options on the closer dated options expirations. For example, I have option strategies, the duration positions. I have videos for that. I have the weekly options, that the short-term swings. I put a lot of those out there. I'm short. And then on the very near term, nearly one option, for example, would be a call for the next day, in order to hedge some of my moves. But I'm babbling on. The whole point is that nothing has changed. We're in a wedge with many, many divergences, and we're looking for a turn. So today I'm going to go through SPX on multiple time frames, up for the monthly all the way down to the 65, and I'll probably end off with SPY and the VIX just to end this, but it shouldn't be very long. So let's jump into it. If you're new here, go down to that bottom right hand corner, hit that Options Center logo, and subscribe. Thanks for joining us here, and thanks for all the support. Tons of likes, and we're growing this channel. Want to get this information out to everybody, and please pay close attention, not to where I think it's going. Do your own research and also hedge your positions for the opposite sort of reaction, especially when you have a catalyst that's coming up. Okay, so we have SPX. On the monthly time frame, we're going all the way back to 1930, the 1929 crash, and I want to show you where we are. We have a lot of confluence here. Notice that there is a little spike above this channel so far, and in this wedge top. So that can be in the future, that can be adjusted. That can be adjusted slightly up. So just pay attention to that. Right now, it fits perfectly to be right here. But if price wants to go a little bit higher to reach the top of the channel, there's nothing that says in technical analysis that you can go up to bring this up to where the shadow actually is. You see where I brought it all the way up to the top of the shadow. Now we have different confluence here. So when we go down to the daily time frame and we check out the secondary scenario that we're looking at for the long term, if we do get a new high, a new all-time high, we'll be looking for a possible test back. You see how this used to be a triangle? We might be back testing that triangle, and we may go for another high. Perhaps this is the high up here where we have more confluence from this channel, from these highs from 2008 to 2009, coinciding with the shadow, but the candle here, and the top from 2022, and in confluence with the 1929 trend line here. Okay, so that's another potential spot in the long run. That's way up at 6,000 or so. That's certainly possible. I don't think that's the case, but that's what we have to look out for. All right, so that's in a long-term point of view. I do think we go to test, at least make a test, bounce further, or test, go higher. That's it. I know that's so binary, but that's what trading is. Okay, so we're gonna go down to the weekly time frame, see if we can notice anything else. On this weekly time frame, we have the top of the wedge going back from 1929. We have the top here, 2022. And we're really not that far away from it. We're looking at about 5,500 here. But again, so you have the top of this this wedge, this expanding wedge here from 2018 all the way to the Corona crash. And you notice that this dashed line here, we may go back to test that, maybe even lower. So just keep an eye on all of these things. It's what we do. We had this channel down here, broke out from it, back tested, went higher. Okay, are we going to go straight to this? I doubt it, but anything's possible. We have nothing that says we've made a turn yet. We're holding on to all trend lines. We're holding the 8 EMA, super important on the monthly, on the weekly, and I believe on the daily as well. So let's go check that out. On the daily time frame, see, I know I plot things a little bit different on SPX, but that's why we look at things in different ways at different times. So we had this huge move, pretty much the same angle, actually a little bit less degree of an angle this direction because we had more momentum heading up this way, and that's I'll explain that. We'll go over to SPY on the daily time frame, actually, in order to get what we were talking about. This momentum line here either coincides with a wave 3 or a C, an ending diagonal. Excuse me, a wave 5 of an ending diagonal. Okay, well, either one. This slope is actually more than this slope, which is more than this slope. If you draw it this way, so you see the momentum is actually increasing as this move goes. So to me, that's a blow off top. That's a ending diagonal or a expanding ending diagonal. Let's go down to the 65 and then we'll go back to SPY so we can kind of translate what's going on here. Most people trade SPY, so we like to go on to that time frame, to that ETF in order to look at things. So right now we are in this large wedge. From the top of this wedge, and I think this is an ABC, okay, for the expanding ending diagonal, which is all in 3 waves. Everything's in 3 waves. I'll show you in a minute. So this is an A, B, C, in my opinion. And so really the C wave here is the important from the top of A, the wedge. We get touches all over the place. It's a very valid trend line right here. And then we have our momentum trend line. Since we made a new high, we had to move this trend line from over here, which we had to break down, and it actually just went sideways to consolidate and then went back up. So now we're putting the momentum line down to the bottom of this position here. So next time we trade below it, that's going to be another sell trigger. Now we're at a objective short right now. We did reshort the market. We're getting a push. It does look a little bit incomplete. Okay, I know this is a triangle here. Let's go over to SPY. Actually, I'll get over to that. Let's go to SPY. I know I'm kind of jumping around, but I just want to give you a different point of view of what when I chart ES as well. We can go through all of those, but I don't think that's really necessary. I think you should, but it gives you a different point of view all the way around. So this is our SPY diagram here. You see, I don't even have any horizontal lines in here. This thing has been just going straight up into a wedge. Now, when you have actual trading back and forth, you have these support and resistance. We really didn't make any of these. Yes, on the lower time frames, but really we're just going straight up. Our next spot, major support, is really this consolidation area that we'll continue to talk about over and over. Once we do break down from this wedge, which I think is possible this week, we'll see. It's getting real tight. The price action is getting real tight in there. Then we'll look for some sort of breakdown, and I do believe this is going to be a pretty rough move down to this consolidation area. There's not much else holding up here. The really alternate scenario that we get such a, and I can't figure out how to count that, but is the 50-day moving average. So that would be some sort of support, at least where we get a bounce off the 50-day moving average. We should get some sort of reaction, but I don't think that'll bring us to new highs. I think that'll be a bounce before we head lower to this consolidation area. We're going to retest. That's a breakout area, and then possibly even further, which would make sense in both of my scenarios that I'll show you in just a minute, that we make it to the bottom of this consolidation area, which is the former high here. A nice top here, former high. And I do think we test that. This is also the standard deviation move from the VPOC on the daily time frame. So that's a one standard deviation move from this. Clearly, we're over 2 standard deviation moves away from that. And we're going to revert back to the mean. It's going to happen. It's a matter of when. Okay, so let's go over to the expanding inning diagonal. This is our primary scenario where we have a 3-wave move for 1, 3-wave move for 2. Notice how each step of the way, each push has more momentum to it. That's a true meaning of a blow off top or a brand new bull market. I don't think it's a bull market. We have a 1, 2, 3, 4, and 5, all expanding in each direction, forming this cone type formation, this pattern. The setup, yes, we hit it. We had reaction off of it. It's still, I know I'm holding on to it. It's still a zone, you guys. So we had, when you have FOMC, when you have catalysts like that, it really skews things. So be careful of that. Don't get complacent. We're right at the top of this wedge, this expanding wedge. So any day now, we could see some sort of move down, and it's going to be pretty sharp here, you guys. I'm looking for some sort of move back into this former all-time high. Like I said, there's a consolidation zone here that kind of coincides with the top of the former all-time high, the top of wave 3 here. So that would be a good zone. But again, like I said, I think we'd move a little bit further, kind of suck the bulls or the bears into there a little bit more, and we get down to these former highs. We cross that. Then it opens up the 2 scenarios that I'm looking at going to in the future. So this is the primary. You get all the way down there, get a bounce, probably a real sharp bounce back to a 62% retracement and lower. Okay, the other scenario is, and I'm going to mention these just about every single time. So this one's real busy. That's because I have a lot of timestamps on here. But the alternate scenarios that we had a huge wave 1, wave 2, and this is an ending diagonal. A wave 3, which is larger than the wave 1 now. So now that leaves anything open for wave 5. So if this wave 3, if we get a real sharp move, ideally we'd like to cross over this wave 1 for this wave 4. Okay, that would be ideal. That's the most common scenario for an ending diagonal, but it does not have to do that. It doesn't change anything. It's not a rule that it has to cross. Okay, so the wave 4, nice deep wave 4, and that would be at the 50% retracement, this white line here, or possibly all the way down to the 62% retracement, which is in confluence with other Fibonacci retracements as well, which would get us to cross that line. So just a 62% retracement from this move here. Okay, 62% retracement on this move solely. The wave 3 would bring us sharply down, cross over here, and they get brand new highs. That's our alternate scenario where we think we touch the top of that 1929 wedge once again. And we'll be looking at time factors as we do this. We're getting ready to get into a cluster pretty soon here, but we'll look at that in tomorrow's video. All right, so that's our alternate scenario. Do I want to look at anything else on this one? Let's go down to the 65. On the 65 minute, you can kind of see this. I drew it a little bit different. We do have the wedge in a light gray line, but I also have a channel here. So with this said that this is possibly incomplete, we'll see this may be an A, B, C, D, E triangle, which just means that we have one last move up here, which is possibly part of an ending diagonal, which means that could be a 3-wave move up there, which means the move may be completed. All right. But if not, if we need a 5-wave move there, then this is some sort of wave 4 where we're kind of closing that gap there. We get support at the gap and then go for one more high. That would not be out of the question. It doesn't change anything. It just means that we still have this channel intact, or the wedge intact. See the top of the wedge highlighted where my arrow is now? That's around the 526, 527 area, and just above that would be the 528 where the channel top is. So those, it's possible it's over now. It's possible to go one more move up. Now that move is pretty minuscule. I'm not hedged on that. I will add to my positions at that point, out to my outer dated swing positions. I'm not worried about a catalyst at this point like FOMC. So I'm not worried about a huge spike up to 530, 535 plus to wipe out my account or anything like that. So, all right, let's go to the Elliott wave on the hourly time frame. And we have this kind of drawn out here, the possible triangle, A, B, C, D, E, and then a 1, 2, 3, 4. And now we have a cluster here at about Tuesday. It's a Monday, Tuesday, Wednesday cluster. So I do think we'll have our top within this time frame of the March 25th, 26th, 27th. I know that's a big range, but it's actual cluster here. So looking for some sort of price action to complete around this cluster, whether it's higher or something getting lower, gapping down lower, a big move, and then going up. So remember, time relationship is in relation to what the price action is doing. So if we get a new high, like I said in the last scenario, and we touch the top of that channel or wedge again into this time zone, that could complete us a top. Now, if we gap down tomorrow and just have this nosedive into Monday, Tuesday, Wednesday sometime, I know that tomorrow's Monday, I'm very aware. You get a nosedive, have a huge move, maybe we complete a 5-wave move down, and in that time relationship, we make a low. Maybe it's just a bounce and head lower. All that's possible. That's why you have to look at things in real time. You really have to pay attention to these, especially on the lower time frame. These clusters can be very short and impulsive and complete before you know it. So I know I have these random numbers around because we were wrong about having a top. Gee. So we can go over to VIX, and I think that's it. Just wanted to give a short update. Hope this isn't disappointing to you. That's what we're looking at. Nothing has really changed. We're in the wedge. We're in the channel. We're looking for a top. Prices coming in. And this bad boy right here, we broke down from this huge wedge, and I said we start breaking down and continuing to the downside, the market's going to continue up. Problem is we're at the bottom of the Bollinger Bands. We're starting to make higher lows, like we're making a wedge. We start breaking out from that wedge, and this may be some sort of false break. We got to get back above here, though. Got to get back above that expanding wedge, above about 1350. All right, so we'll be watching this. It takes a lot of time. It's hard to kill a bull. All right, there's lots of different sayings about these. Having Stopping a bull market. How does it go? It takes time. And then a bear market ends with an event. It's something like those terms. In other words, you have capitulation for the bear market. For the bull market, you have, it could take months, clearly, and so much divergence. And what this is really telling me is that it's such an important top. It's taking this much time, this much divergence, that I think this is going to be a really, really important top. In either scenario that we follow through, whether we get a brand new high, pull back and get a new high, or just the top itself, either situation, I think this is a very important major top. And I think the market is kind of pointing that out. I've seen a lot of tops, and they do take time, but they have not looked like this. Okay. So anyway, that's what I got for you. I'm going to check back in tomorrow with you. Promise I'll make a new video to keep you updated on to Monday into Tuesday. I think it's going to be a very important short week, Monday through Thursday. We have Good Friday. We'll be off. And not a whole lot going on except the PCE on Friday when the market's closed. How dare they? So you got to be careful going into the 3-day weekend as well. But I'll keep you posted. So don't forget to like the video. Thanks for joining us here at Options Center. Hope that didn't take too much of your time on Sunday night. Enjoy your family. Have a good night.